first, let's talk about this. Citigroup, it has become the first Wall Street bank to get the thumbs down from shareholders over excessive executive pay. Now, at its annual meeting yesterday on Tuesday, 55% of shareholders voted against the pay granted to the bank's top executives, including, of course, the chief executive, Vikram Pandit. Although the vote can't be enforced and won't force the bank to cut any pay, it is certainly seen, though, as symbolic. Let's get more. Chris Roebuck from Cass Business School joins us. Always good to have you with us, Chris. So I say it's a symbolic, but I've been reading some saying it's also a historic vote. Does it represent a sea change?
It could represent a sea change if other shareholders follow suit and say to themselves, even though these resolutions are non-binding, we can send a moral signal and send a signal that says we're not happy with the degree to which we think what these people are being paid actually really represents a performance that's value for money. And
that's what it comes down to, right? Yeah. The performance. They want to see the value of performance. Yeah. And some would say, if I'm looking at some of these figures with Citigroup, that the shareholders perhaps have a valid point. I mean, Citigroup, $45 billion government bailout in 2008. Shares down 24% in the past year. A staggering 90% down in the last 5 years. Ain't in a great situation, the bank, is it?
No, and it failed the stress test earlier on this year. But it is moving in vaguely the right direction. The key question here is the degree to which shareholders are saying, look, this remuneration, does it represent value for money for us? And indeed, when we look at the way the cake is split between shareholders, employees and senior leaders, who's getting their fair share? And I think some of the shareholders in some of these institutions, particularly the banks, are beginning to say, hang on, this lump that the senior executives are getting is actually not really fair in terms of us as shareholders putting our capital in.
Absolutely. And I guess part of the problem here, though, would be, and correct me if I'm wrong, is that there's the vote by the shareholders is non-binding, so it doesn't really force the bank to take action and cut pay. But what will they do? I mean, some would say they'd be pretty stupid to ignore it.
You effectively have more than half of your shareholders who do not approve your executive remuneration, whether it's non-binding or not. It's a fairly strong and significant message, but it also sends a message, to the rest of the organisation, because it's not only shareholders will be watching this, the employees will be watching this. And if you think about it from their perspective, those employees will be saying, actually, from our perspective, is this right as well? Because, yes, we have the cake and the senior leaders get this and the shareholders get this, but what about us as employees? And if Citigroup, and indeed any organisation, wants to perform well, those employees have to think that what they're getting paid compared to the senior executives is fair and equitable. Otherwise, they don't put in the effort that's required.
And I'm sure, of course, shareholders at other firms across all sectors will be watching this very closely. Chris, great stuff as always. Thanks for joining us. Chris Roebuck from the Cass Business School there. Let's move on.